And because you're always in a hurry to make trade entry, you become a victim of liquidity. Hello guys, welcome to this channel. This is Forex Trading Institute. So in this video, I'll be showing you how to trade order block and to avoid being stopped out in a trade. Okay, so I'll be showing you how to trade order block and to avoid being stopped out in a trade. Now, one most important thing that I'll be sharing with you in this video is about liquidity grab. Okay, so one big problem a lot of traders face is they enter the trade, quite early, and they become a victim of liquidity. Okay, so what does liquidity simply mean? So in a simple word, I would put it this way, that liquidity is actually where money is sitting. So very quickly, in order not to waste your time, I'll walk you through by explaining on a design, way of illustrating what demand zone is all about, and then show you guys what to look out for when trading the forex market. Okay, then later on we can try by checking the chart and then find some of those areas where price has actually played out as illustrated. So this is an example of, let's call this our support level, and then let's call this our resistance, which is our supply level, right? This is our supply, this is our supply, this is our demand level. So let's say price is coming all the way from the supply level. It comes like this, push back, forming higher high, higher low, retrace back, came down, retrace back, came down, retrace back, and then came down, retrace back, and got to the support level. Right now, as price has gotten to this demand area or our support level, price at this point is likely to consolidate for a short while. Right, price is likely to consolidate for a short while. It could take some hours, it could take some days. It depends on what the market makers are doing, if there's no much investment going on. Now, peradventure price eventually breaks this area, breaks to the upside. It breaks this current this very resistance here that we have. So let me show you something. Peradventure price breaks this resistance here. Sorry guys, peradventure price breaks this resistance here. This will likely be our support. Okay, so this area here, let me color it with a different color. So peradventure price gets to broke this resistance and then crossed to the upside, and then we should expect price to retrace back, right? So price retracing back. Now, if price retrace to the resistance, right, to the resistance area, which is this line here we drew, we map out our resistance, right? If it push back to this very high here, to this very area here, you are likely going to become a liquidity, right? In the market, you're likely going to become the liquidity, because it is almost impossible. Let me not say use the word impossible. Most times price would not respect this level here. Price will eventually come down again to this area here, to this very support or our demand area. Okay, so price coming to this very area where it broke the resistance, and then you just jump in because it came to this area here, and you jump in for a buy. you're actually not doing yourself good, okay, because you're likely going to become the liquidity. Yes, it's possible that price is going to push to the upside and then probably continue going. It's possible, but in most cases, price need to come down to where the journey started. Where did the journey started from? This very support area here. So this is where the journey started, and price need to come down to this level, before pushing to the upside. So let's say price eventually gets to this high. It broke this resistance of consolidation and then move a little bit up. Now you expect price peradventure gets to this place and then it starts to consolidate, right? It starts to consolidate. Now you are tempted that, okay, price has created another high here, which is resistance, and then it has broken the resistance by going a little bit up. So what you're looking out for is like, okay, let me be expecting price to retrace a little, and then I put my buy. Now you're likely to enter at this very area here. For example, you place your entry target here, and then your stop loss somewhere here, right? And then your take profit, you're looking out, maybe take profit somewhere here to this very area here, or something, whatever the case may be, right? So you're looking out to take profit at that area. But unfortunately, sometimes you are likely going to become the liquidity. Now, what does that mean? Because price hasn't fulfilled its responsibility, which is price will likely come like this. That is inducement, right? It comes consolidated for a while, after a consolidation for a short while, maybe double bottom or triple bottom, and then it broke to the upside, retrace, and then you're looking out for a continuation. Then eventually price will shoot down, right? Unknown to you, you're thinking as if, okay, the journey have started, but somehow you will notice that price will just push down to this support area here, and then boom, it goes the other way around, right? It starts going the other way around. Now, what really happened here? Now, that's to tell you that there's an order block resting somewhere here, right? There's an order block. Let me color this differently. That's to tell you that there's an order block resting somewhere here. This one that I painted green. There's possibility that there's an order block resting somewhere here. And because you're always in a hurry to make trade entry, you become a victim of liquidity, because price consolidated for a while here. It broke the resistance here, pushed up, and then retraced. So you're thinking, okay, the journey have started. Probably it broke this this very high here, moved up, or there's possibility that from this very place here, price can push down, because you're thinking that, okay, it's time to enter because it retraced back. It can push down and then starts the journey from here. Okay, so these are different methods how price actually work in terms of grabbing liquidity. Now, so what does this really mean, and what are you expected to do? Now, sometimes, price, I am not saying price sometimes do not respect these areas here, because sometimes there can be FVG, which is fair value gap. Okay, there's possibility that there might be FVG. There might be fair value gap somewhere here, and then you're working with, instead of order block, you're working with FVG. Your techniques, you're working with FVG. That okay, price, once it comes, you want price to fill up the imbalance that took place, and then so that you can be able to execute your trade entry. So that's what you're looking out for. So there are two options, either order block or FVG method that you're looking out for. I don't know. I think I'm explaining this more like to people who already understood, smart money concepts. But if this explanation seemed to be a little bit you know above your understanding or above average, you can let me know in the comment section so I can make a follow-up video to explain better what I mean by all what I just did right now. All right guys, so that is that. And don't forget to like this video, subscribe to this YouTube channel, drop a comment, and then let me know what you think about the video. Thank you guys, see you in the next video.